Hello and welcome back to another CashBright short video. So let's not beat around the bush here. What the hell is a stock? If you're not entirely sure, you probably at least know that it's a type of investment that can generate you lots of money. And generally this is true. But let's look a bit closer at what exactly stocks are, why they exist, how they are traded, and how much money people can expect to earn from owning them. A stock is a type of security or property that signifies proportionate ownership of a company's assets and earnings. Think of it like a piece of paper that is given to you by the company you have chosen to invest your money in. By having at least one stock in a company, you become what's known as a stockholder. In essence, stocks are a form of property which are offered to the public in exchange for cash. So when a company intends to move from being a private company to a publicly traded one, it will look to issue stock to the public in what's known as an IPO. Don't be confused though. This term just stands for an initial public offering and is the first time the public is offered stock in that company. After the IPO, stock is then traded as normal on the stock market, a market which is also sometimes called the secondary market. Stock can be bought and sold on stock exchanges like the New York Stock Exchange. Traditionally, regular people bought stock from a stockbroker. This is just someone who simply buys and sells stocks on behalf of clients in exchange for a percentage commission fee. These days though, stocks can also be bought and sold via apps on your phone, meaning that the general public have never before had such direct access to the dynamic and volatile world of securities trading. Is this a good thing or a bad thing? Something to think about. So all of this begs the question, why do companies bother issuing stocks to the public? And why does the public buy them? Well, it's quite simple really. They all want money. A company that issues stocks can generate money for its business operations. People, on the other hand, buy the stocks more in hope and expectation than anything else. They can make money from either buying a stock and selling it on for a higher price, or by holding onto it and receiving what's known as a dividend. A dividend is like a reward, and it's a payment from the issuing company to its stockholders. It's a way for the company to make its stockholders feel valued, and to also garner trust and confidence from the public in return. Overall, the world of stocks is a very fast-moving and volatile place. No one really knows what way the markets will go, and this is why many people compare it to the world of gambling. What's more, many people get sucked into this world by overinflated expectations, like they think they will buy a few stocks and make millions of dollars. This is highly unlikely. Making money through stocks takes lots and lots of planning and above all, time. Risks are always round the corner, and managing these risks is the key to becoming a successful stock trader. So now you know a bit more about stocks. For even more information, feel free to check out our other videos on all things money and finance. Until the next time, stay cash bright folks.